Hey, what's going on, everyone? Shalon Winter here, aka Future Sniper Beast. So today's live trade review is from September 4th, Wednesday morning. If you are not familiar, if this is your first time checking out the channel or first time checking out this type of video, I do a live trade review. Basically what that is I record my trading session when I was trading in the morning, and I narrate and talk as I'm recording my reads in the market, what I'm seeing, all that. And then I post that later. So today's video, or this morning, I should say, we had the JOLTS report come out in the morning at 10 a.m. I nailed it today because I called out some manipulation, market manipulation. It was clear as day. Called it out, took a trade, nailed a 50-point trade. It was beautiful. So you'll see that. And so I hope you pick up something from it. If not, just hope you enjoy seeing my trade for the day. And by the way, I put in a request from Apex Trader Funding last night. Already got approved. I saw a bunch of people putting in requests saying, hey, I just put in a request, It's already getting approved. So that is awesome to see. Good stuff. Getting ready to put in 2 more requests today. So the payout period closes up tomorrow. So we'll see if I get any more accounts. I have 9 accounts right now. 3 I'm taking payouts on. The others are right there about to take some payouts. So anyways, hope you enjoy this video. And if you haven't been here before or if you haven't done it yet, please like and subscribe. I'm going to keep doing more of these. Going to keep putting out more videos. And I'm also going to be on the Trader Bacon Show Monday, September 9th, live at 11 a.m. Follow. There's going to be more info on that as well. So let's jump right to the charts. And here we go. All right. So we're inside this gap still. So here's a 5-minute. So let's go zoom out to the 5-minute. And we have this low. We have this high. You can see there was some relatively equal highs back here. This high took those out. So now we have this as our buy side liquidity right here. It's going to be our buy side liquidity. And then this down here, it's really this London low is going to be our buy side or sell side liquidity. But we have that news at 10 o'clock. So I'm not expecting the price to really do much right now. But if you're looking, we do have this gap right here at this opening range gap. Took the swing, came back into it, into this order block, respected the order block. If I measure the wick of the order block, look what happens. Look at the middle. Look at the middle right here. The bar's closed right at the middle. And the wicks did the damage. The bar's closed here. And look at it go right up to buy side liquidity. So this could have been an entry right here. 78. That's 50, 70 points right there. That'd been a huge win right here. Right to the middle of the opening range gap. It's probably going to go up here to today's new day opening gap, and then up here to the opening range gap. So we got to see what happens at this buy side liquidity. See if I go to the 1 minute, see what happened there. Yesterday's low, we're gapping up. And And see, like right now, a minor sell side liquidity would be right here. Because you got this low, came down right to the bodies. Came here, here, could not reach this low, here, and then you had this one, relatively equal lows right here. This came up, came back, and this got close to this low, but it couldn't get there. So now you have, that means you have sell side liquidity all right here. We'll see if it keeps going, but for the immediate, and that's the thing. For the immediate, you look for the immediate. And then if it keeps going, then you got to just see where it's drawing up to. That's why I marked these other ones, all these little gaps, because this is internal range liquidity. It very well could just keep going up. You got the opening range gap up here. You have news. So the news at 10 o'clock could pop it all the way up there. And then come down, and this would be a target if we took a short. And we might be getting a gap here, though. Maybe. Still 13 minutes. But if we got a gap here, and price is up here, then we either go to it or wait till price comes to it and then look for a long off of it. Let's see, this was that order block on the 5 minute that I mentioned right here. Right here, see? Your entry. And guess what's there? An inverted fair value gap. 5 minute order block, 1 minute inverted fair value gap. Because see, this bar inverted it with displacement and closed up here. And then it came up, and you see it did leave a gap here on the 1 minute right here. But look, as price came down, look where it came down to. This inverted gap in this 5 minute order block. And then you see it hit here, da 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 da. Then one last touch right here. And shoo, all the way up through buy side liquidity. So now we wait, let price draw wherever it's going to draw to, and wait for it to come back. I mean, it could go all the way up to, the good thing is you want it to at least, when there's opening range gap like this, you want it to at least go to the middle. But like I said, we have the new day opening gap right here. It's probably going to go to that. I mean, this was a good reason to go long. And actually, we could have gotten long right here too, in this gap. Because we have a reason for it to keep going up. So you could have gotten long in here. And then take it up to here. See? Bam. Target. So this would have been a beautiful trade right in here. So we know it went to the new day opening gap now. And it went above the middle of the opening range gap. So very well could go down now. It drew up. So I bet you, look what happens if I mark the new day or the opening range gap, the high and low. I bet you this is going to be in the 75% range. Watch. Just eyeballing it. There's going to be the 75% line or 25%, whichever one. If I mark here to there. Here it is right here. Look where the body's closed. Let me pull it out further. Look where the body's closed. So here's the halfway mark, and it went up to the 3/4 mark. To perfection. And the wick hit that new day opening gap. So now it drew. It had its draw. Took buy side liquidity. So now we got to see if we see some displacement down, then we can look for our short to run out this the sell side liquidity. But first, yeah, we want it to come back through this gap. We want it to come back through this mitigation right here, because this high will be a mitigation, which is in the middle of this gap. So first we got to see it actually do a market structure shift. Look, we got 40 seconds till that news comes out. So we'll see what it does. We just created on the 1 minute these relatively equal highs here. Let me erase this stuff down here. Oh, news shot it down, not up. And might go and take sell side liquidity. We got to wait, though. This could be manipulation. They want to run it up. What do? They take everybody out. Everybody that has stops. All between. This is what ICT was explaining on one of his videos he sent the other day. If they want to run it long, they're going to take all the stops out from sell side liquidity, because that way everybody that has stops between. People put stops under lows. So people are going to have stops under here, under here, under here, under here, under here, and then sell side liquidity. That's what sell side liquidity is. It's people's stop losses. So depending on how people trade, scalpers are going to have their stops under here, under here. But swing traders that look for bigger trades are going to have their stops under sell side liquidity. That's where their stops are. So if they need to clear, if they want to run price up, they can't just go up. That's too many contracts. It's too much money. So they run price down to get all the liquidity and all the money from other people and wipe them out, and then they take it up. Look, it's going to wipe out down here, and then it'll probably run it up. So we'll see if it happens, but it looks like it's very possible, because we had the big bar down, the wick came down sell side liquidity, and then you had the bar closed right here just under sell side, the minor sell side though. And look what's right here, this dotted line. That's the middle of the daily gap. We got to watch here, because we very well could be running all the way up through here and maybe even higher to this opening range gap here. We got to pay attention to this gap right here. Let me get rid of this so we can see. And this manipulation, yeah, this is a long that I want to take right here if we come back down into this gap. 20. Going long now. I'm putting my stop at the bottom of the bar that created the fair value gap. We should run up through here though and hit this especially because that's a 15-minute gap right there. There's yesterday's low. I really think we run out these highs and hit the opening range gap high up here. So we'll see. The low-hanging fruit, if this works out, will be these highs up here where the new day opening gap is. 921. Actually, that's where I'm going to put my target because that's a good trade. If this holds, it's in a 15-minute order block right now, too. I can't switch screens because I don't want to switch. But right now, we're in this 15-minute gap and order block. I think we go up. We had the manipulation to the downside looking at the 15-minute chart. We should go up. We have a nice volume imbalance on the 5-minute up here at this gap as well. We manipulated down. We took sell side. We took buy side and sell side, and this should be a breaker to the long side from the 15-minute chart. Like, we should just run up through these highs up here. And actually, right here is where the volume imbalance is. So price could come up to here. That's actually a really good trade if we just come up to right here. There it goes. Look at the wick. That's manipulation to the T. It's going to keep going, and I knew it was. This is the 1 minute, but look, the 15 minute, this is what told me we're manipulating. This was a beautiful read. Look at this wick. So that was news. But look, we have this 15-minute gap right here, right? $15-minute gap. We had the minor sell side liquidity. So the news shot it down through the gap. This is an order block on the 15-minute. And this wick, because it's shot down through minor size sell, this is why reading using the higher time frame is so important. Because it took the sell side, the minor sell side liquidity here. And then what did it do? It came all the way back up above this fair value gap, the 15-minute gap. So that this was here. And then our 1 minute, it came all the way back up and left a 1 minute gap inside that 15-minute gap. So when it pulled back into this 1 minute gap, that's also yesterday's low. When it pulled back into this 1 minute gap that it left us, which, by the way, before that happened, look what happened here. This low that created this big gap down, it rebalanced it. This wick came all the way up and rebalanced it. So it rebalanced this down bar. So it rebalanced on its way up and left a gap inside that 15-minute gap. So I was confident that it would come back into here and it would not close below. That's why I put my stop at the low of this bar that created the 1 minute gap. So I was confident we would come down into this gap, into the 5-minute gap. The 15-minute gap, which was also an order block right here at this area on the 15. So let me show you. This whole thing, you want to see the middle of this stay respected. This is the order block. It could go all the way down here, but you want to see the middle stay respected right here. So when I go to the 1 minute, here's that order block. So it came down. Look, this line right here is the middle of the order block. And look where price came down to, the middle of that 15-minute order block. Exactly. And then it closed, and I saw price close here, because I saw a wick here to the middle, close, and then wick to the middle again, close, and then came back to the middle. That's why I kept saying, there's a 15-minute order block right here, should not go down further. That I just couldn't show you while I was live. But that's why I had my stop right here. This bar already did the manipulation, already did the damage. So we had the 1 minute gap, we had the 15-minute gap, the 15-minute order block. We had multiple things that our stop was below. And we already took the sell side liquidity here. So then if you look, relatively equal highs right here, right? And then is there anything else? Yeah, there's the new day opening gap. It never went to the higher one. Then you have this 15-minute gap. Then you have the finishing part of the opening range gap above. So if anything, I figured price would come right back up to these highs and then go up and take out liquidity above. And that's what it did. All right, so that's a wrap. I hope you got something out of that. Like I said, I like to go through the charts, record myself as if I'm talking to an audience. And like I said on the last video where I did this live review, is my son has been sitting in with me too. So he'll pop in, he'll sit there and watch, and I'll kind of explain things back and forth to the video, to my son. So, and for myself out loud. So I hope somebody got something from this. Again, like, subscribe, share, and I plan to keep doing more of these. I do plan to go live here soon again. So stay tuned for that. And I'll see you on the next one. So as always, trade well, everybody. Take care.